What if you could invest directly in meme stocks without trying to time individual names like GameStop or AMC? Today, we're breaking down the Roundhill meme stock ETF, ticker MEME, how it works, what makes it different, and who this ETF is really for. Welcome back to the ETF Investor. The Roundhill meme stock ETF is an actively managed ETF focused on highly speculative U.S. equities known as meme stocks. These are stocks that experience sharp short-term trading activity driven by online engagement, social media buzz, and retail investor momentum across platforms like Reddit, X, Discord, and trading forums. Unlike traditional ETFs that focus on fundamentals such as revenue growth, profitability, or valuations, meme is designed to capture social momentum. The goal is not to find the best companies, but to identify the stocks getting the most attention and trading activity right now. The process starts with an investment universe of around 200 highly traded U.S.-listed stocks and ADRs. These stocks are first ranked based on implied volatility, which comes from options market pricing. Implied volatility reflects the market's expectation of how much a stock's price might swing, and high implied volatility often signals speculation and heavy trading interest. From that list, the top 30 stocks with the highest implied volatility are identified as potential meme stocks. The advisor then applies a second layer of analysis focused on social media momentum, looking at online engagement and activity trends. Based on this analysis, the final portfolio typically holds between 13 and 25 stocks. The weighting of the ETF is also based on implied volatility. Stocks with higher implied volatility generally receive higher weights, meaning the most speculative names can have a larger impact on performance. Because meme stock trends change quickly, the fund can rebalance as frequently as weekly. It's important to understand that this ETF is designed for short-term trading dynamics, not long-term business fundamentals. Performance can be highly volatile, with sharp gains during periods of strong social momentum and equally sharp declines when attention fades. This is not Roundhill's first attempt at a meme stock ETF. The original Roundhill Meme ETF was an index tracking fund launched in December 2021, right after the peak of the meme stock craze. That version struggled to maintain investor interest and was closed in December 2023. This new version is different. It is actively managed, uses updated screening methods, and places more emphasis on real-time social momentum and implied volatility rather than a fixed index. The flexibility allows the manager to adapt more quickly to changing market behavior. So who is MEME actually for? This ETF is best suited for experienced investors who understand volatility and are comfortable with speculative exposure. It may be used as a small satellite position or a tactical trade, but it is not designed to be a core long-term holding. If you're looking for stability, income, or predictable growth, MEME is probably not the right ETF for you. But if you want targeted exposure to meme stock behavior without picking individual stocks, this ETF offers a structured way to do that. As always, understand the risks, position size carefully, and remember that social momentum can disappear just as fast as it shows up. If you found this breakdown helpful, hit the like button, subscribe to the ETF Investor, and let me know in the comments what ETF you want covered next.